is worse than our already pessimistic projection. And unfortunately, not having vaccines or treatment, in other words, medical solutions on scale, that means that for some economies, a more adverse development is likely. What is absolutely essential is to recognize that decisive actions have stabilized the world economy. We have seen massive injection through fiscal measures, $8.7 trillion, and the message from the IMF, not a usual message, I must stress, is to countries, please spend as much as you can, and then a little bit more, but keep your receipts. So we don't want accountability to be lost. And we also have seen the central banks acting in a synchronized manner in unprecedented fashion. So we do have very dire environment, but we also have taken very decisive actions so we can build the bridge between now and then when the recovery is to start.
Right. So just to clarify, you will be downgrading your already pretty dire forecasts.
Very likely, we are going to come up with the update of our projections sometime in June, and at that point,
right.
Our expectation is that unfortunately there would be a bit more bad news in terms of how we see 2020.
Right. So in terms of the IMF, you have already doubled your emergency fund. You have pointed out that you have about $1 trillion worth of firepower. Is that enough? And how do you interpret the American decision to block proposals to expand the use of special drawing rights?
So let me stress that our shareholders had the wisdom after the global financial crisis to boost the financial strength of the IMF. We now have 4 times more than we had then, from 250 billion to $1 trillion, as you said. And we are deploying these resources with speed and impact for the countries that are at highest need of that support. In an incredibly short time, we have disbursed to over 50 countries, 50, never ever in the history of the IMF that has happened. We also have done 2 other things that are hugely important. One, we recognize that it is the weaker countries that are at highest risk. The same way people with weak immune systems are hit the hardest by the pandemic, weak economies are hit the hardest by the economic shock from it. So we have called on our shareholders, on our members, to triple our concessional financing capacity. And Gillian, this is quite remarkable. We are just about to reach our target within short 4 weeks. Usually when we call for concessional financing, it takes months and months and months and months. Now the response was very, very strong, and that means we can do more for those who need this help the most. And the other thing that people need to recognize is how important it is to bring down the debt burden on the weak economies. The same way countries are doing it for their companies. Together with the World Bank, we called for a debt standstill. It has happened, and that means some $12 billion more for policymakers in poor countries. We also have a debt relief of our own. I'm very proud of it. For our poorest members, for the next 6 months, we have already guaranteed they don't have to pay the fund. They can use this money for health and for their most vulnerable populations and parts of the economy. And we intend to extend this to up to 2 years. Now, this this is all measures that were not immediately obvious we can do, but the membership came together behind us, and we are doing it. When it comes down to SDRs, indeed, this is not where we have today full unity, the necessary agreement among our members. Where they actually agreed, and we took this agreement, we are running with it, is to use existing SDRs in the hands of wealthy countries. They don't need it, but there are emerging markets and developing economies that can make great use of these SDRs. So we are building a transmission line. And during our spring meetings, it was very clear. The membership said everything is on the table. Let's see how this crisis evolves in the future. One thing I got confidence, and I can say that to our viewers, the IMF membership is determined for the IMF to play its role as the center of the global financial safety net. And they told us, look at, do you have enough? And if you don't have enough, tell us.
Is that code for you hoping that US will offer something to SDR expansion?
Obviously, my job as the leader of this institution is to make sure that we deliver for the members, and we can deliver for the members more when we keep the membership united and together.
Right.
So I'm using everything to lift up support for our members while at the same time keeping the membership together.
So, in practical terms, Peter Gopinath, your chief economist, said on Friday that the external financing needs for the emerging market would be about 2.5 trillion this year. Even if you got everything you wanted at the IMF, you wouldn't be able to plug that gap, and the private sector credit markets are looking increasingly nervous. How many defaults do you think we're going to see this year amongst the emerging markets? Could it get above a dozen?
So let me first clarify that good news, bad news around the 2.5 trillion. The good news is that countries do have buffers. There are quite a number of emerging market economies, developing countries, that during good times build reserves and capacity to act in bad times. So the call is not entirely and only on the IMF and other financial institutions. Countries themselves can and do quite a lot. Bad news. It is likely that this 2.5 trillion estimate is on the lower end. I actually would expect that as we do revisions of our projections, we would also revise this number, unfortunately, upward. So for us at the fund, very important to concentrate on clearly understanding what are the protection measures we can offer countries, so we don't see a situation in which a liquidity problem turns into a solvency problem. And what are these measures? Obviously, boosting our emergency financing helps. It is a lifeline for countries. We doubled it, and then going country by country and looking for ways in which, in individual circumstances, using our traditional instruments, we can preemptively, early act. So the question that you ask me doesn't lead to a very dramatic answer. Obviously, we are concerned about debt sustainability. Unfortunately, not everybody in the past took good times as a source of building strength for bad times. And if there is one clear moral from this crisis, it is build a resilient economy, because we are in a more shock-prone world, and when you build strength, you deploy it when you need it.
So I should say, by the way, for anyone who's watching, if you want to ask a question, please do. You can use the Slido function on our Q&A format actually on the screen that you're watching right now. I'm sure you have many questions, and we will take votes about which are the most popular questions and pose those to the MD. But Argentina, the IMF has come out and agreed with the Argentinian government that its debt burden is unsustainable, which raises two questions. Firstly, do you think that the private creditors should simply accept what the Argentinian government is asking for right now? And was it a mistake for the IMF to lend 45 million to Argentina, given that you now think the situation is unsustainable?
We are certainly very keen to support Argentina as it deals with a dual crisis, the coronavirus crisis and the debt sustainability issue that is clearly quite serious. It is long-standing tradition for the IMF to not be party of any discussions around that. It is between Argentina and its creditors. What we have clearly stated is that is not sustainable, and it is in the interest of everybody that Argentina moves towards that sustainability. As for the program that the fund has with Argentina, or actually we still have it actually, because it hasn't been yet cancelled. At that time, when the decision was taken, it was to boost growth prospects in Argentina. The IMF does assess the prospects, keeping clearly in mind that there is risk involved, but it is our job as lender of last resort to give a chance to economies to succeed. And it is our duty to the membership to respond to requests working with that recognition that we, as a lender of last resort, are in a more in a riskier position. Now we are looking forward, and what I see in Argentina is actually a government that wants to do the right thing for its own people and for its role in the region and in the world economy.
So, on a slightly different note, there's obviously been a lot of fragmentation politically around the world, and although many people would hope that a crisis like this would bring people together, in fact it seems to be creating as much fragmentation as collaboration. So I'm curious, how do you assess the current situation, say, in the European Union? Are you concerned that the kind of ruling we've had from the German court in recent days is going to add to the risk that the European Union could break up, and maybe you'll have some countries from the European Union needing to ask you for help?
Let me say that it is always the hate and fear that have a very loud voice. What we don't quite hear are the millions and millions of voices that actually, in the context of this crisis, are saying we are in this together, we can only get out of it together. And that, in my view, this is actually the prevailing opinion among ordinary people, and it is my deep conviction. So in my institution, we will do everything possible to bring the world together. I have faith in Europe. As you know, I spent 7 years in Brussels, and what I realized is that it takes time. These are, after all, sovereign nations. They have somewhat different interests, but it is always the unions, the collective wisdom that prevails. And I do expect to see Europe once again coming through this crisis. And bringing the world together for vaccines. Well, bravo! We need more of that kind of bringing the world together. We on the ruling you mentioned, it is under legal review, so not appropriate for me to comment. But I have confidence that the European Central Bank will operate within its mandate, properly transmitting on its actions to all jurisdictions. I think we will see a positive role being played, not only, by the way, important for the Eurozone and European Union. It is important for the rest of the world. When the strong hard currency economies take action, there are positive spillovers for the emerging markets and developing economies. And let me just give you one example. In March, we were all extremely concerned of the flight to safety from emerging markets. $100 billion, 3 times more than during the global financial crisis, left emerging markets in this one short month. But the provision of liquidity by the Fed and also by ECB, by Bank of England, by Bank of Japan, it has lifted up the overall liquidity in the world, and now we have seen actually reversal. Emerging markets with good fundamentals, they go out, they issue at very, very, very reasonable yield, and that helps them, but it also helps the whole world through this very difficult time.
So essentially, central banks have a role beyond just their borders. The ECB and the Fed have a responsibility more widely, is what you're saying.
Yes, they have been benefiting. Obviously, their direct objective is to serve the businesses and people within the Eurozone, within the United States. But opening up, the Fed opening up repo and swap lines for emerging markets, very important, very positive. The European Central Bank going beyond just the Eurozone in terms of opportunities to help the EU members, very important role.
Right. We will now open up to questions. I believe there should be some questions coming up, and let me just quickly try to see those because I need my glasses, I believe. Let me try and see if I can read these. One second. Here we are. Right. Okay, I'm going to ask this question here. Will the IMF considering issuing bonds, such as pandemic bonds, into the secondary markets, like the World Bank, to allow the IMF to tap on private investors to help?
So, different business models. The World Bank does go to markets and issues bonds. The IMF doesn't do that. The IMF's strength comes from the quotas and a capacity to borrow and own land, which is a different way of protecting the world economy. So the answer is, at this point in our history, that is not an instrument that we have, but what we do have is very large scale financing, $1 trillion cushion for emerging markets and developing economies based on the quotas, in other words, collective ownership of our members, and our capacity to transmit lending from strong economies to those who need that support.
Right. Okay, I'll take one more question, which is that how does there's been a shocking lack of global coordination in managing the crisis. Do we need to review the global architecture following this crisis? Do we need a Bretton Woods 2, if you like? I think you have about a minute to answer that. So
Well, okay, so here is my answer. We always have to strive to improve the way we work together. And it is important to take lessons from this crisis for the future. I am convinced that if we are to have a better world for all of us and for our children, we will have to take this crisis as an opportunity. And what it means is that we build a recovery that addresses problems that we face as a world. It addresses the problem of unsustainable growth. It addresses inequality that has been going up even before the coronavirus. Don't let it go any further. And in that sense, I would love to see my institution coming through this crisis as one that supports building a better world.
Right. Well, thank you very much indeed, Kristalina, if I can. It's been a fascinating chat. I mean, I take away 3 key points. One is that we have already seen some shockingly bad economic statistics and projections in 2020, but these are likely to get worse. So watch out for more very sobering news next month. Secondly, the IMF is clearly committed to trying to do almost whatever it takes, to borrow a phrase from Europe, to try and keep providing aid to the emerging markets and other areas of the world that need it. And we are indeed in unprecedented times, and you're certainly experimenting in some unusual ways. But thirdly, you do face a very difficult challenge to both keep the members of the IMF on board together, as you said, and you've made it clear that that's a priority, even given that the White House has sometimes a different view from others, but also to make sure that you actually take the actions you need to. So I'll just conclude by saying, on behalf of all of us at the Financial Times and everyone watching, thank you for taking the time to talk to us, and I would also offer you a very heartfelt good luck. We certainly need you to try and find a way through this crisis. So thank you.
Thank you very much for having me. Stay well and strong, and so would we here at the IMF.